Aditya, thanks. Welcome to the show. Thanks for joining us. 19,200, is it coming soon? Sooner than expected? Are we on course to that level on the Nifty? Also, tell us what about the Bank Nifty?
Good afternoon, Ajay. Thanks for having the show. Yes, I believe markets will remain a bit under pressure. And you just spoke about the broader markets. I believe broader markets are still holding grounds. And I wouldn't be surprised if you see a significant correction in the mid cap and the small cap end of the space, because that is one area which still is sitting at overbought levels. And I see multiple negative divergences building up on the small cap and the mid cap space. So a bit of cautious advice to all the traders and investors, especially in the mid cap and the small cap end of the market, that be a little cautious, be on the watch out, because if you're sitting on decent profits in most of your stocks, it's prudent to book at least partial profits and look at re-entrants at lower levels. Talking of Nifty and Bank Nifty, yes, Nifty first, I believe can test levels of 19,200, Ajay. That is the immediate support, which was the previous pivot low as well, from where we witnessed 20,000 up move on the Nifty. And to be honest, I wouldn't be surprised if that is broken as well. 19,200, 19,250, which is the immediate support level. And we can head to levels of 19,000 on the Nifty. On the upside, clearly now we are making lower lows, lower highs, and 19,500 to 19,600 is the immediate hurdle now, and 19,250 is the immediate support. Talking of Bank Nifty, there too, witnessing a bit of profit booking, and especially the PSU lot, which was holding on for past few trading sessions, is now witnessing a bit of profit booking. So I believe 43,800 on the Bank Nifty is the immediate support level. If that is broken, I believe Bank Nifty 2 can slide all the way down to 43,500 to about 43,400 on the downside. And clearly 45,000 on the upside acted as a stiff resistance. So the 20 DMAs have acted as a stiff resistance, and now on the way down, the 100 DMA, which is at 19,200, 250 for the Nifty, will be the immediate support which one should watch out for. And a word of caution on the broader markets, which can see a significant correction from current levels.
Before I talk about your stock ideas, because many are shorting the market and are getting rewarded as well, because not in the recent times I have not seen a market worth shorting so clearly. I mean, you have so much gains on the table sitting out there to be taken for shorters, and the macros are providing just the backdrop to do that. But pull up the small cap and the mid cap index. I want to know the levels you're watching out for. If we take the gain, the small cap, mid cap indices have made from March lows, almost 30-35%. I will ask PCI to please pull up the last 6-month chart to capture that. How much of those gains do you think could be wiped out in this leg of melt up, where you are saying mid caps, small caps are more vulnerable to fall?
So Ajay, let's look at one key support line, which is the 20 DMA on the mid cap index. We'll talk about the mid cap index, mid cap 100 first. From April of 2023, when the index started to trade above its 20 DMA, every correction took support at the 20 DMA, and from there we witnessed a new high on the mid cap index. It is now that the index is clearly trading below its 20 DMA. So the first line of support is broken for the mid cap index. The recent lows, which is close to about, I would say, 39,700 is the immediate support level for the mid cap index, but I wouldn't be too surprised that is broken too soon. So below 39,700, I'm looking at a sharp correction of all the way to 38,700 on the mid cap 100, which happens to be a 61.8% Fibonacci retracement level. And if I plot a RSI along with that on higher time frame charts, say a weekly chart or a monthly chart, you clearly see a breakdown of sorts, and a turn down from about above 80 levels on the weekly chart, and similar is the case on the monthly chart. So on several parameters, I see a breakdown on the mid cap index, and it is just the start of the correction, Ajay, if I can say that, because as I mentioned, it can slide all the way down to 38,700. If that happens on the index, you're sure what will happen on the stocks. The stocks will get butchered. At least you will see on a regular basis a 6 to 7 or a 10% correction on a lot of these stocks.
Okay, so that's a view coming in. Quickly, Aditya, before we let you go, your stock recommendations?
So Anisha, I've got a buy and a sell because a lot of these mid-cap cement stocks are still looking attractive to me. I picked up a Ramco Cement for our viewers. They can still look to buy the stock at current levels. Look for a target of 1,030 on the upside with a stop loss at 890 on the downside. Sell is from the pharma space because after a decent up move in most of the pharma names are witnessing a bit of profit booking in trade today. So Sun Pharma is looking weak on the charts. Can slide all the way down to levels of 1,085, 1,065 as well. So with a target of 1,085 and 65, I would look to short the stock with a stop loss at 1140 on the upside.
Thanks, Aditya. I appreciate you joining us on the show.